I want to talk a little bit about tariffs again and just game out like what could happen from here on out because here we are, effective tariff rate, back around 15, 17%. Like you can see where we've been. So we had Trump come in. We moved from that like 2.5 or whatever, all the way up to 27 at one point. Then we had Liberation Day. That's where that hit. Then we had the reversal of it, back down to like 7. We're now sitting at around 17%. And I think they're pretty committed to be able to keep it at somewhere around that level if they can. Now the situation is that we have this hearing coming up on terms of are these tariff implementations legal or not. So this is interesting. So it went through the first round at the Court of Appeals, where they basically started to make the arguments about whether they can basically enforce tariffs through executive action as opposed to congressional oversight. And so I'll just read this real quickly. But Thursday's hearing was held before the federal circuit's entire slate of 11 active judges instead of a typical 3-judge panel, meaning the ruling can immediately be appealed to the Supreme Court. 3 of the judges were appointed by Republican presidents and 8 by Democrats. Several judges appeared skeptical of the government's argument that broad terms in IEEPA allowing the president to regulate importation should be read to allow Trump to unilaterally impose tariffs. So a lot of legal speak there, but basically they're laying the groundwork for this to go to the Supreme Court. And then we will get the understanding of whether these tariffs are allowed or not. If they're struck down, all the tariffs that have been collected so far will have to be reimbursed. That's one of these effects. But then also there's this dynamic, and interviewed Anthony Constant this week, and he was talking about just the interplay between the big beautiful bill being stimulative, but that being offset by tariff revenues as they stand right now, and it's sort of modestly contractive once you add the two together, if we assume the tariff level we're at right now. So, okay, with all that said, I want to game out with you guys. What would happen if this gets overturned? Like if basically tariff implementation through how Trump has been doing that, if that gets reversed, they have to reimburse everybody, and now there's no more tariffs. What would happen to markets?
Initially, the impact is they have to refund 100 billion or around there, whatever we're at through August. I think it's around 100 billion, and then the forward outlook subtracts, 400-ish billion from the annual budget revenue, and so you're looking at an even greater blowout of the deficits than probably even the CB. You're looking at the CBO numbers basically, or maybe something worse. So the bond market wouldn't like it, and then when you go down the chain, okay, you say higher yields. On the one hand, you could say, well, then dollar would go up. The funny thing is that when people are going to relate, okay, reverse whatever happened to tariffs last time. Okay, no tariffs, stocks up, stocks dollar up. But back then when tariffs were rolled out, it was amidst a broader policy agenda of the Trump administration of essentially austerity. It was with Doge, it was with cuts, it was with balanced budget, and then tariffs were like kind of icing on the cake. And those were all the reasons I was bearish in the first quarter of the year, because they were, like Besson was saying, 3% 10-year, which looking at it now, you're like, nice. But that environment now has pivoted. The backdrop of fiscal has pivoted to blow the deficits out outside of all those things. And so I'm not so sure that it would be, I think maybe you'd get a pop in dollar and stocks because people would celebrate no tariffs. But the difference is that we now have an, much worse deficit situation than was contemplated then, as well as stocks back to the levels of, the valuation multiples they're at. So my gut would say yields up. I don't really know short term, but eventually you would expect to see that NASDAQ to like real world economy, small caps rotation come back, which if you look at these charts, it's insane the move that NASDAQ's put in relative to, equal weight and real economy, small caps Dow. You would expect that breadth to kind of widen out the other way as tariffs have obviously,
because the core of the economy would be reaccelerating.
Presumably, they get this huge stimmy check, but the tariffs are regressive. They're hurting the small caps, the low income consumers the hardest, who can't afford the the cost hit. So I guess it would be a pop, and I guess it would be a good, you'd presumably see strength. But it's also increased uncertainty. Like the thing I question is if is it just a big nothing burger? Because to me, the whole time here, the reason that deals started coming through with trade partners was because they kind of knew this was coming. Trump has already tweeted multiple times over the last few weeks. The only thing that could derail this beautiful thing is the radical left judges. He's been tweeting this at the end of his tweets. So it's like he knows something's coming. So I kind of wonder if it's a nothing burger because he just threatens the countries and said, hey, you abide by these trade deals we already struck, you pay the tariffs. Or so you might have some countries that say, fuck you, I'm not paying tariffs. And then you might have some countries that say, okay, we'll listen to your trade deal and pay the tariffs. I don't know. But it doesn't seem like it's a great thing to have more uncertainty. But it's tough. Like, I don't know.
I sort of feel like there's a risk premium in gold right now associated with just tariff uncertainty. So I feel like you'd actually see a bit of an unwind. You don't agree, Quinn?
I think anything related to tariffs in the market is chewed through. Like that premium to me would have gotten gold's like the asset that I keep. Everything to me comes back to gold. And obviously that has positive read-throughs to Bitcoin as well, but there's a lot higher correlation from Bitcoin to risk asset multiples. And you don't have central banks buying Bitcoin. And so I don't understand how gold is not. I know it's up 30% year to date, so I hate saying this, but I just don't see how it's not higher in 6 to 12 months.